Everyone, in this video I'm going to be exploring a new strategy. Some people were requesting, like, do I have some kind of a trendline crossover strategy, and are there other ways of using MACD? So I actually come across a page which I'll share with you guys as well. This is on babypips.com, and they have actually did a collection of various indicators that have been proven to be good in trading with buy-sell kind of indicators. So I've looked through these various ones, and one I find quite interesting to do, which I'm going to be doing today, is the MACD. So specifically, they're going to go long when MACD, the fast line, crosses above the slow line, and to go short when the MACD 1 crosses below the MACD 2. So that's exactly what we're going to do over here. This will not work on a 5 seconds chart. The reason why is that, if I put it on a 5 seconds chart, I'm going to realize that a lot of the time, we can't really get a proper expiry, and a lot of the time when the cross happens, it's not going to stay up very long. So after looking at various time frames, I felt that the best one would be the 15 second. 15 second is still in fact better than the 30 second as well. The kind of behavior that we want is that, once there's a cross, it continues to move. So I find that 30 second has the same problem as a 5 second, which is that it is not able to catch the movement at the right time, whereas the 15 second is able to do so. So once it happens, we will go in for a 1 minute trade. 1 minute is 4 candles. This is the first one, and then we're going to be using Martingale money management, which means to say that there will be some cases where it crossed down and crossed back up. When it crossed down again, that is when we're going to go in for the Martingale trade. And in the case when it does not, okay, we will then take opposite direction, but we will first attempt this to see if it has a second cross, because we already see a divergence setting up over here. We're going to look out for the second cross, and then we're going to go and double up, same duration as well. We're waiting for the second trade here to cross over, and then we're going to do it. One tip for everyone, I like to put the mouse click to be on when I trade to avoid unwanted clicks. We're very close. Engulfing candle. This could be it before it close. Okay, we have the close and it crossed, so we're gonna take this like that. If you haven't already seen my series of videos on the Ikimoku Cloud, this is another trading method that you can review and see which one you prefer. Why did we choose this time frame? So as mentioned, 5 second, we cannot catch the bulk of the movement. Neither can we do so in the 30 second. So I always believe that the time frame should be the one that allows you to capture the most of the movement. So with the expiry and also the chart movement, it should be able to allow you to spend the most time in the profit area. So this is quite a good result. So for today on a good slate, so this actually covers the first loss. Now we can obviously wait, or we can find something else to trade. So go to currencies. I think this has been overextended for some time. So we already had one fail. Second one here should be quite good. Look out for a nice engulfing signal, and then we can take it. So set it back to the first one. By the way, if you have not already gotten your account, you can click any of the links in the description. I've got a few broker links set up for you. First of all, this pocket option, that's the one I'm using right now. There's also like Kotex, which I just did a review on my last video, so do check that out if you haven't already done so. I have more reviews of different brokers on the way as well too. We're looking at for the next candle. Already have a pin bar, so it's quite a good sign, but let's wait for the next one to confirm. And we're going to go in for a minute. Should be at the end of this candle. And it's just barely touching, so I don't want to jump the gun. It may still break apart. MACD is in the default settings. We have a cross. I think we should just take it. No! Take it. Here. What exactly happened? I think it must have crossed on that pin bar. That's what I reckon. You can say this is a reversal type of strategy. It can be reversal, can also be trend continuation. Depends on when you're entering the trade. So at the end of a long sequence, it's good to do a reversal, but it can also be a continuation of a trend. Alright? And it won in the last seconds. So 1 minute able to capture a nice movement. So that's 2 net wins so far. Let's continue with a different pair. This one, I think we were just okay. This is where the cross happened, so we are actually in a good time for this trade. Of course, you're always welcome to use different kind of chart studies to help you make a better decision, such as horizontal resistances. And what I see here is that we have a few horizontal support levels here. So it's a matter of sooner or later, if it doesn't do on this one, I believe on the next cross down it will have some resistance at this point and then cross down nicely. This did not work, and we'll wait for the next. So let's wait for the next cross down, set it up, should be soon. So if you haven't realized, you notice that I like to do the trading in a very rule-based way. Why? Because if we leave it to ourselves and our so-called intuition, sometimes our intuition can dull or get blurred sometimes. But if it's based on rules, it's easy to repeat. The goods may not be as good, but the bads won't be as bad, and it can get a generally good performance, if you get what I'm saying. So let's look at the next higher level. 01, higher support, should be soon. Let's wait for the cross. Almost one more candle, I think. Almost one more candle. Let's go. So you should see some kind of a pattern formation, like a head and shoulders pattern perhaps. Once again, it doesn't really matter as long as we get the kind of movement that we want. I think we're gonna lose this trade, and then let's just wait for the next close. We might see a cross up and a cross down. In such case, I'm gonna do the next trade where I see separation between here and a break of the line. So that's actually our Q point. Let's go for it right now. Alright, there we are. Very nice. We're gonna do a few more setups. Actually, so far, if you might have a look, and you know, one of my ideas is that it might be better to focus on trend continuations as opposed to reversals. So let's say in a downtrend, we see that it comes up, cross up, and goes back down again. These are probably higher percentage. Will not have to get into a martingale situation like once or twice as this one. So in the last 2 setups that we did, actually we're trying to time the end of trend turnaround. So either it plateaus and it turns, or it just turns. So the one we're looking at here as well is similar. It's like an end of trend. Notice there's been a few waves already, and this one, you know, we're probably looking at a turnaround. But we'll just take them as they come. Again, the best ones would be a continuation of trend, but at the same time, you just cherry pick your trades, pick them at the end of the movement, and when there's no further downward momentum to be had, or no further upward momentum to be had, then we can get a nice decisive win. Alright, let's wait for this one to cross up. Engulfing bars are great, so any second now. Yes, here we go. In my videos, I always like to talk about symmetry. So the patterns in the chart always leave clues. Try to look at, you know, how they are dwelling, you know, how it zigs and zags, and then that will help you to pick and expect, you know, pick setups where you can more or less expect a certain outcome. Alright, that's one more trade. So this is how many net wins? Let's have a look. 2, 3, 4. 4 net wins. Alright, how much time did we take? Taken about 14 minutes so far. Now let's try to finish off with one trend continuation trade. This is already in the uptrend, and let's see if we can get it. No, wait a second. This is actually downward continuation. Let's do a downward continuation trade. Previously going down, and we'll just continue it down. So down spike, sideways consolidation, further downward movement, another sideways consolidation, further downward. That's what we're expecting over here. We might have to take it on the reversal. So let's just see, okay? Let's see what happens. If it breaks lower, then we do another put trade, or if it crosses up, then we will do opposite direction. So let's see what happens. If it crosses this low, I will take put trade. So sometimes it may cross up and then cross back down, but sometimes if it does not, you'll have to break the next low. We might get it, so let's set up for next trade and wait for this to close. Wait for that to close. Here we go. It's a very steady trend and it's doing exactly what we wanted. So that's a total of 5 net wins. And let me know what your thoughts about this strategy. Did you like my Ikumoku one better, or this one, or what do you think? What are your opinions? Let me know in the comments down below this video. Thanks for watching, and look out for my upcoming broker reviews. In the meantime, if you haven't already gotten yourself an account, or let's say if you have an account but you like the content I'm doing and you sometimes think that, hey, it could be great if could reach out to Julian of the Binary Lab sometime for some help. So support me with any of the broker links down beneath this video. And if you need some help on one of the trading questions that you may have, most welcome to shoot me an email. And you can find my email once you subscribe to my mailing list. So respond to any of my mails with your problem and your account. I'll help you out over there. Thank you for watching. Have a great week ahead trading.